I'll start off with what we've done on NSE Connect. We actually appreciated the opportunity set for the private markets and started engaging with SMEs and came up with a diagnostic tool, which gives them visibility, accelerates them into fundraising, and then finally allows them to raise capital, whether in the public markets or in the private markets. We wanted to come up with a platform that would provide the first level of technical due diligence. We give you a business score, looking at the sustainability of your business. Second thing is we look at your corporate governance. Do you have a board? If you don't have a board, you can't progress to raising capital or listing. Third thing we look at is your financial score. Do you have audited financials that can be uploaded on this platform? We also look at what is your projections. Do you appreciate how your business works, how your margins are evolving, and what can you do in the future? Because then we are able to put you out there and you can be able to engage with financiers. I think our contribution to this conversation as NS is as simple as this. We started Ibuka in 2019. It didn't take off as we had anticipated. We changed our strategy and we started originating companies from the associations that run SMEs in Kenya. We started off with 50 companies, 30 graduated from a 5-week coursework, and out of those, 22 are actually on this platform, and they're looking for $29 million in terms of a funding need.
And in Uganda, we've carried out a few initiatives to look at the private market, especially the SMEs. We benchmarked off what Nairobi was doing, but also looked at the different exchanges around Africa and opted to, I would say, tweak the way we would approach the private markets. So we put in place a market we call the USC Specialist Market. In the local language, it's called USC Edala. Edala is really a ladder. And what that means, it's a stepping stone for companies to come to the market and be utilized and use the different opportunities to raise capital. And quite similar to NSE Connect, we go through, we put out requests for applications, and in November 2022, we put out one. We got 16 companies, SMEs. Of those, we were able to shortlist 8, and of the 8, we were able to get 4 that were actually looking for funding, and we're able to meet a lot of the criteria, not only in terms of audited financials, the governance, among others. These companies are currently looking for about $22 million, and we are out working hand in hand with them to pitch them to the pension funds and the different funding investors that are available. Now, it's quite challenging when you get to that part where you actually have an SME, a company that qualifies, but is not able to be listed on the market, because one of the issues is that they are not interested in coming to the market, but they want to raise either debt or equity. When you go to the pension funds, they'll tell you, no, we only participate in listed products. So you find that you have to hand these companies over to advisors and hope that they get the funding they require. Now, as exchanges, you create the gap arises that you lose control at that point, and these companies, yes, whereas they'll eventually get funding, it's not through the exchange mechanism. So it's either back to the bank, private equity. But what we do is that we ensure that we admit them into the market, they sign MOUs, and we continue that journey with them in terms of educating them, prepping them, and ensuring that they are part of this conversation on an annual basis.
Over the years, we have seen that there are very minimal entrants in the stock exchange in as far as listing is concerned. In 2013, we introduced the AIMS market, the Enterprise Growth Market segment for SME and startup companies, but 10 years down the line, we've seen only 6 listings. And mainly they are from the financial institution, the banking, and they are mainly the commercial banks. And this is, we got them mainly due to the capital requirements by the central bank. There are 4 of them, and 2 are from other sectors. So since we noted that the enterprise growth market is not working, but the economy is being run by the SMEs, which are large in number, and they are prospering and they are getting the funds from the private markets, we decided in 2019 to introduce what we call a DEEP program. DEEP stands for DSC SME Acceleration Program. It's a capacity building program where we invite owners of SMEs or managers of SMEs to undertake training on issues relating to corporate governance, financial management, and so forth. Thereafter, those who pass the vetting line, we enroll the firms until our newly established SAS. SAS stands for SME Acceleration Segment. It's a segment where we enroll companies looking for capital, for private capital. We enroll those companies for visibility and profiling and trying to assist them meet the venture capital providers.
So as far as the private market is concerned, we are a bit fortunate in Zimbabwe because the asset managers are allowed to invest up to 25% of their capital into private alternative investments, so that they call it. So there's quite a vibrant market that is besides the exchange in terms of large to medium projects can raise money. And what we like very much about it, because it has been our pipeline in terms of companies getting listed. And we have helped quite a lot of companies who indicate very much early on that they want to get listed. We tend to work with them. Sometimes we go to the extent of actually getting them approved through our listing process. And we'll approve it subject to certain things. So they can go and capital raise saying, look, we've been approved in principle by the exchange and we're raising money on that basis. By the end of 2, 3, 4 years, we'd have gone to this far. And it has helped quite a lot. One of the things that I don't like about it tends to be that those people are able to raise money from institutional investors. And when they come to the market, then they are listing by introduction and they don't include the small investors. But it's been quite a good pipeline for us. One of the best ones for us was the first REIT that got listed on our exchange. They did that process. They came to us. We approved them. They went out and raised money, did the buildings, then they came to the market. So it worked very well. Worked well for a mining company as well. They came to us, they went and raised money and came. So it's been quite good for us. In terms of SMEs, my belief has always been trade finance. We have done a lot on trade finance. Unfortunately, the environment in Zimbabwe made us stop that initiative. But what we did on the trade finance was we worked with the companies that are listed on the exchange, where we allowed private money to come and finance their suppliers. And that worked very well because our listed companies, we know them, they pay.
And so the first thing that I think we had to do in my earlier opening statement was to figure out how do we access capital in a way that it is linked to a project, doesn't affect our unit prices, and most importantly, how do we source that? So we had to understand two things at the time before we went to market. Was we had sourced private capital of up to about $100 million. We had developed the first 2 seed assets. That was for purpose-built student accommodation, what we call PBSA. That was Jogo Road and Waraka, and we're just coming off finalizing Wilson View, which is next to Strathmore. But what we had to ask ourselves is it really sustainable? Because the amount of time we were spending looking for money out there locally from pension funds, who we all know how they operate, they're very rigid, but they have a lot of capital, and also merging that with DFIs, and people that have done this before and understand that. So we had to understand the business. 3 drivers were driving the business at the time. Demographics, Kenya's demographics, median age, and things like that, technology, and urbanization. But in sourcing our sustainable capital, we had to look at climate action. And that was number 1 to try and scale sustainably. So what we did to introduce ourselves to the capital markets, instead of going to do just another debt, go to the banks or go to another DFI, is we came up with the first project-linked green bond in Kenya, to be the first to be listed on the NSE and cross-listed on the London Securities Exchange. And that underpinned and gave ourselves the ability to commit to the green building standards on energy, on water, and on construction materials, to be able to scale with low operating costs, but also have a very low impact on climate action. And that was very key, because real estate is very, very notorious, for spoiling the environment. So that was number one. So we came to the market and we said we want to introduce ourselves when everyone else is running away from public markets. We want to move from private markets to public markets. We did the green bond. The first time we launched the green bond, it was for 5 billion. We raised 4.3 billion. 2 years later, we upsized the bond to 5.7 billion. And that we just were looking for 1.3. We got interest for 3 billion. So we exposed ourselves to the market and said, look, we'll start this way. So once we had done that, we'd sorted the debt aspect, introduction to ourselves on the public markets, and then we started committing to certain things on the NSE and on the London Securities Exchange in terms of what we needed to deliver.